Hey, what's going on, guys? We're just going to be talking about the market environment, and I'm going to just give you guys a little glimpse of basically what realistic expectations to have about this market. Um, because it's not anything too special. I will have to say, if you weren't catching any sort of fade from over here, if you weren't catching any fade within the confines of this range, from the upper range into the lower range, from like 496 down into 488 minimum, then the market's been very difficult, right? Obviously, you have all the focus that's over here on Bitcoin, and this got a really nice back test of what we would consider some sort of like weekly level, and that was a really nice hold on that weekly level, right? So all of these ranges of internal based liquidity were kind of held, and everyone was kind of trying to front run this whole breakout out of this trend line on the daily slash weekly, and that led to a very nice little correction for a couple days, right? And I feel like this was all, even on the back test over here, guys, this was still just all really playing with fire, right? You go over to some of the miners, a lot of them are not moving, and when stocks aren't moving under very high implied vol, that can lead to obviously a very bad outcome, right? So obviously you have your leaders, something like MSTR, it's still really nicely moving. You have something like coin that got a little bit steeper of a recorrection and a retest, right? But at the end of the day, guys, none of these charts are really offering us too crazy of risk reward. I'm not a big fan of the premium. It's not fun to sit through these things, right? So I basically I never trade anything crypto related. So with that being said, that's that. And as far as the rest of the week goes, we started our window of weakness, right? And we already started to see the signs of distribution happening into that OPEX day on October 18th, right? And then we get into the window October 21st. And this is where we kind of start printing these rest days that are sitting within the bar that looked a little bit distributive and within the more of like the um, signal bar from the top of the trend, right? Which was technically a failure over the daily gap, right? So the charts were aligning for this to be a short. However, it was a little bit difficult to time. This was pretty easy to hold through like mid-November expiration. I really never saw any drawdown, and basically the only time that I re-entered this trade was basically off of Friday. So I shorted last week on Thursday, and I figured we would get the mark up and then the move higher back up into the top of the NWOG. That's whenever things started to break down a bit and we got the fill of the overnight gap, right? And if you go into your hourly time frame, you're going to be able to see how this was a really beautiful risk to reward, and as well as just simply from also a higher time frame perspective, this was the top of your NWOG. You get a really nice gap up into that via data, and then it closes right back down towards its lows, where you also get a secondary opportunity to be able to short this thing off of what we would consider swing high, swing low, right off of the 618 if you go into some smaller time frames or whatever here, right? So I had some shorts over there. Those played out really nicely, and then I re-shorted this thing as we got into OPEX. Um, and I realized some down here, repurchased. Obviously, the continuation kind of failed, and then obviously into the close of this day, I just kept adding and adding and adding into the mid and end of November expiry. And then we got the really nice sell. And if you go to the daily chart, the sell actually makes perfect sense as to where this kind of went to. You have a big time gap that's sitting from all the way down here at 481.50 up into 487. That's a very notable gap that you can't necessarily see so well from the daily chart, right? But that is a 1% gap up on the Nasdaq, right? So whenever you are kind of getting into this range over here, guys, I would definitely consider scaling this. This is also a retest of a previous high that was macro related, right? So you always want to take your scales and start scaling into the weakness that happens down at these areas, especially given the fact that we started to see a very overextended trend that would likely lead to a leg into the close. And then we also had data leading in from Wednesday into Thursday, right? So you always want to de-risk and lock in some profits, especially within a window where the market could either stick around to the range or sell, right? And you always want to lock in your profit, just because we don't know how deeply this is going to retrace. We just kind of know we're going to get a slight recorrection, which is enough to get paid with some options, right? So that was basically the highlight of the week for me, and that's basically what I've been planning for a very long time, leading into that window of weakness. And then you go take a look at some of these other tech charts, guys. NVIDIA, not too great, right? You're kind of consolidating and really deciding off the previous all-time high and off this previous swing over here if you'd want to move your way higher. And the volume patterns haven't told us really anything yet. We obviously have a report coming into the middle of November, so that's a little bit further out on the report. Obviously, I think we could get a move based off of how we're trending our way higher into another all-time high with the report in a few weeks. And then you go over into some of these other tech charts where, yeah, things have just kind of just been consolidating here with no true, clear, clean risk to reward or higher time frame levels. I mean, Microsoft might be shaping up for a move tomorrow, but this whole entire window and the price action within this window has been relatively shit, right? I could have caught the Apple short on the news on Apple. This has been a beautiful looking short side trade. However, I had QQQ on that same given day, so I don't really care. I mean, QQQ also ran 200% alongside this Apple as far as like a week and a half of expiration and then a few weeks and like a month of expiration. With all those combined, it was over 200% at those lows, right? So I don't really care to have caught Apple, and it's like within a window of everything being indecisive, with the market potentially chopping around, with longs needing to be tighter risk, given the fact that we are in a window of weakness, and then the shorts needing to be tighter, given the fact that there's no true, clear directional read from any of these time frames, then it's like, yeah, you kind of gotta really, really play slow, right? So the other trades that I had on the week, GM, I talked about this one in the, right before it actually happened into the pre-market session. This was just a slight little opening print right above the breakout level on a 1, 2, 3, 4, 5, 6 test of this big level over here. And then we also had structure development post-spring. So this was a beautiful flush trade, given the fact that the orb as well as the opening print was kind of where your risk should be, right? So I got some decent looking fills over there, and it was basically a pretty easy trade. DKNG, another one this week, intraday wise, that I took. I was following this gap over here, right? And then what happened was we sold back down into that candle, and we actually lost the gap. However, we had a really big volume, and we failed to make a new low into the close, and we had this ever so slightly, this tiny little wick over here, right? So when you go into your 15, or let's just call it the hourly, take off your extended and just look at price action. This was basically getting a nice little relief into the closure. And what this also kind of did was this was pushing down and then pulled up and then gapped up heavily right into that. And then they obviously resold it within this resistance and off of this gap that was ever so slightly not filled over here, right? And then that's what led to another markdown, 4% capitulation within the first 15 minutes, which was an anomaly to me. It really was, because I figured, you know what, we're going to have to dig a little bit higher into this candle and at least into this gap that was lost and capitulated through on for the purposes of collecting supply, right? So whenever you see a big time imbalance like this into a support and then the move kind of stalls off a little bit, and you see how this was, the move was actually created within 10 minutes of the day, followed by a lot of consolidation into that closure with basically a low that was kind of being accumulated into a new low, and it failed, it popped into one more low into a strong close, right? So I figured, you know what, this is going to be a decent little trade here tomorrow. I'm going to go into my 15 and my hourly and dial in on like where a decent looking entry would be, right? Pay attention to the volume, If there's a relatively low volume, we should move our way higher. So I just picked up some calls down here, and I basically was looking for this to hold the previous day's close, right, which was the slight little gap that we actually had downwards, and then we popped right back above and then started to flag out off of discount or yesterday's close from here. And that's whenever I was like, okay, yeah, pull fibs now from a discounted put premium perspective, and then take a look at like low to high. And this was right into your discount off of 38 bucks, right? So there was another growth trade to that, Roblox. This ran 500% on the weeklies, but nothing too special over here. Couldn't really get enough size, and I scaled most of them on this day. I already talked about this thesis a lot. This is a big time weekly signal bar on increased volume that actually had a trap beneath this weekly level at 40.80, right? And this is just your secondary higher low coming off the bottom of this trend. So that's your second higher low from this higher low. And basically what I was looking for was for some sort of higher low to be put in within this thick spread, this thick bull spread on all of this volume, right? Because that's very notable, right? When you get a big markdown of like 9%, right? And then you just fill that on intraday price action the next following 2 days. And then afterwards, what happens is the volume dries up towards the top. And then you get a seller basically pushing this thing lower into the discounted range of swing low to swing high as far as this major signal absorption bar looks like. And when you start seeing how the trend is stalling and how sellers are failing within the golden pocket from low to high, that's what intrigues me to look at this for a long side trade, right? But we do have the report, unfortunately, on next week, and we actually have a lot of reports in the general market right now that are blocking us from being able to trade decently close expiration to get a decent bit of leverage, right? But I don't want to open up anything that's too far dated, right? So with some of these charts, you're forced to trade some weeklies, and I'm not a big fan of trading weeklies, especially for an overnight type of trade, right? Which this was the whole thesis around this trade, right? So yeah, I couldn't really do anything about that one. As you guys can see over here within the Discord, we actually had some calls right up here, right where the higher low is kind of being put into place over here. Small calls with weekly, just lottos since we had the earnings in the way. So with that being said, very easy chart and easy trade there, except for the expiration that I was actually in. And that was basically it for the week. I took it and I've taken a couple small stabs at like some intraday stuff, and those have been okay. Really nothing too great over there. Obviously we had another attempt on DKNG the next following day. That one was a small wash, and I was looking for this thing to start maybe holding a higher low on this level, which was like your previous orb breakout area. And I figured if this were to get a failure over the yesterday's close, as well as this big gap right here, basically what I was doing was I was adding off the open and trying to figure out if this thing could basically pivot and find its way above that level. Sorry, that's white. Something that looks like this, but the target was already hit on the trade, right? So size was light there. I tried it again and it consolidated here on really low volume. So I was like, you know what, I'm cutting and I'm just letting the DKNG do the work for me, right? And you guys can see as right over here, I'm cutting DKNG. I'm just going to write up my QQQ short today. That was at 1026. 1026 was basically just the consolidation, right? 1026, here's 1025, right? And that was, my ads were within here, right? So there was nothing too crazy about that one. It wasn't even weeklies. It was next week expiration. So yeah, very basic, easy little puny loss. And then as you guys can see over here on 1026 of this day, we actually had a gap down followed by a small little pop. And 1026 was basically over here, right? So you still had a decent little opportunity to look for the mark down out underneath this support and then eventually test the lower extremes. If you're not catching trades like this, where the NASDAQ's obviously plummeting from low to high, 1.8%, which is a very strong intraday move, then you're missing out, right? And I talked about this. I said the window of weakness is an opportunity of a little window of a 2-week period where we know likely that a sell in a I should say, a cool off on tech can be very vulnerable trade opportunity, right? And it was. And I talked about this before, during, and after, now that we're here. And if you're not catching the trades like this within a window of very, very minimal opportunity, very scarce opportunity, then you're going to get toasted. XLE was another just simple little intraday trade. So a lot of my trading has been either a wash, a slight little paper cut loss on high risk to reward, a lotto big win on a lotto based trade. And as far as the full size trades go, or trades that have made full size amounts of gains, it's been literally 2 trades on the week, right? So yeah, I don't think there's a lot of opportunity really anywhere right now, especially with the earnings reports kind of blocking us from being able to trade a lot of these. XLE was another one that I took. This was the XLE. Yeah, see, this is where I said I was de-risking the DKNG the previous day. And that's where I was also looking for that thing to pop up into basically the $38 level. And then we also had XLE up here. So basically XLE really was internal liquidity. So this big bear gap that's actually sitting right over here. This actually might be the level on the top. Yep, it is. This is a big bear gap on the daily, right? And we push back down to that, and that's where we held a multi-day base. If you guys want to take a look at my rotation videos and stuff like that, I typically do like to talk about how like energy will catch a bid on tech blood. So this is the 23rd that we had the tech blood. If you go over to the 23rd if you go over to the 23rd or the 22nd, those general areas with energy, I was basically just taking these slight little ads off of like the supports and then scaling them up a little bit higher into the resistance or the upper extremes of the hourly range on next week expiration. And yeah, I mean, it was a very, very, very simple chart, guys. It was like a 20-something% win on the XLE. I scaled a little bit over there, and it never really seen any nice continuation. So yeah. And then the rest of the trading week was relatively boring. I lost on some CELH light size, so that was obviously covered through Roblox, and then the rest of the losses have just been small little tiny losses after the lack of continuation looked to be failing. I had an NVIDIA short today, so what I was looking at, I was DMing with my buddy on Twitter about this one, and I was thinking about rolling Qs today. However, we just kind of consolidated over here, and there was no true clear sign, and I noticed the NVIDIA tape kind of shifting into the open of today, right? So what I saw was um, bids get absorbed up here within the first like 30, 45 minutes of the day. And then if you go into the 5, basically what was happening over here was once we started to lose that opening print, I started to see a seller get a little bit aggressive beneath, right? Which is also kind of starting to get aggressive right into that 140 psych. We filled the overnight gap. And then we pushed our way higher, and then I saw some more buyers starting to get absorbed, followed by a more aggressive seller that was incrementally kind of pulling down their ask into these areas to press price beneath, right? And I caught a nice little candle right off the open, actually, which was at 10:30. And then ever since that 10:30 bar was kind of bought back up and it was a failure of continuation, we kind of just sat there and consolidated, and I cut in the consolidation for a slight little paper cut. This was my risk right over here, which was basically the overnight area. Once I saw the final potential lower high coming off of that spot, that's whenever I was like, okay, if we pop back up and then get back above this area and don't use this as basically our last pivotal lower high to continue our way lower, then I'm just going to cut it, right? I mean, I'm just looking at 5 and 15-minute structure, and this looks to be the last attempt of some sort of lower high that would come. So basically what I was looking for was, okay, if we could get beneath the current trading session low, we're going to target into Wednesday's low, and then obviously beneath Wednesday's low comes the gap fill all the way down into here, which is at 135, right? And my initial risk was actually off of like 140. And then once we got beneath 140, we kind of sat there and based underneath 140, and I had basically some sort of risk to reward that looked like this, right? Because I started to think to myself, the market's getting really bad. There's not really any opportunity anywhere, and there's a big lack of continuation to a lot of areas within the market. And I saw a lot of you guys have this, and you guys were like, "Oh, how are we so wrong?" Like, we weren't wrong. It's just, are you trading? This is not really being wrong, right? I mean, this is just flat out consolidation, and that's why I really value risk management right now, because you are not going to be able to you're not going to be able to survive with trying to catch these types of moves on weeklies. I don't think. I mean, obviously you can do this on like a couple weeks or maybe just a week of time, but I feel like it's a little too unmanageable if you're looking for this on a 1-day expiration within the current market conditions that we do have. And the best ads were obviously off of the morning session, seeing the failure and the retest of the level that we were a previous all-time high at, right? And this was also the previous breakout that is now potentially failing. So we're basically just looking for lower highs off that area in a nutshell. But yeah, aside from that, guys, there really hasn't been much opportunity. The only thing that I truly missed out on was Apple, and Apple was basically a driving thesis for my QQQ short. So is it necessarily something I missed out on? No. Could I have caught it? Probably. The tape was extremely ugly. Um, yeah, I mean, that's basically all there really is to it. I don't think there's really any other opportunity, any other area in the market. My only position that I actually have right now is this kind of getting a back test of this previous range. And we had a really nice volume pop for the breakout. We're covering a lot of the spread on that candle, and we're also kind of retesting into this gap level that we closed successfully above, which is also the $89 level. So I have some calls here, and basically what my ads are off of would be like level areas on 89, a little bit beneath 89. If you want to take a look at like intraday discount or just swing low, swing high, you could take this low all the way down here, whatever it really is, as long as you're adding within discount and off of like yesterday's previous consolidation, yesterday's previous trading session high, then you should be in a decent little cost basis for your calls. And I feel like I will definitely cut these if they can't hold the territory that we actually have been holding here today. So yeah, we'll see what happens with this one. It's not very heavy sized. And then the rest of the market is basically just a waiting game and waiting for those swings to play out, finding really nice optimal entries on these clean accumulations that are building into the election area, and then obviously once we hit those, that'd be basically wrapping up the year. So there's going to be a lot of money to be made, but is it in this 2-week window? Probably not. I mean, all the volatility within the market is basically just coming off of Tesla, as you guys can see, even with like these sympathies to the names that are performing really, really, really well. It's really bad price action. Something like Rivian, something like Lucid. This isn't like 2021 or 2022 where you had this really nice market, or I should say 2021. It's basically just a market where you got to gamble, or you got to catch a short, or like you got to not really trade much. We're getting a lot of volume kind of pouring in over here to ARK and a really tight multi-week base off of the trend break. So I think that this could be a really nice vulnerable long side chart once we get that ignite candle, which would be over like the $48 resistance. And then obviously the only clean looking chart that's of my interest would be XLE. So Yeah, aside from that, guys, I don't really see anything that's too clean. You go over into like your sectors list and you take a look. Let's go see what SellH actually did as of lately. Okay, it got a nice little pop off of the gap fill, which I was actually talking to you guys about in the scan. I didn't catch this today. This was a really nice opportunity to add some calls. I don't know if you guys ever did. If you did, very good look. I'll probably end up throwing this back on the focus just for this to find some sort of higher low. This is the entirety of the gap fill followed by obviously swing low, swing high, well beneath discount. So yeah, with that being said, that's basically the market overview. As long as you're just kind of focusing on the survival aspect of it more than just trying to outsmart the market in every which way possible, then you'll do well and you'll be a lot more prepared than the other people who lose all their money for the time of where we have actually real moves in a much better market.